Today is April 28th, 3:27 p.m. We detected unusual option activity on Amazon, and as you may know, it had reported earnings, and as we had predicted, it had gone down. So you'll see this negative 3% currently. And so if you haven't watched our earnings video, we'll put that at the link at the end of this video and in the description on how we predicted this downward move. And so for in this video though, we're going to go over our current trade now on this based on the unusual options we see. We're going to explain our trade first and then tell you why we're trading that way, which is based on what we are seeing on the unusual options activity. So without further ado, let's get right to it. Our first up trade was that we sold the 103 strike puts here. As you can see, our position right here. So you'll also see here that the volume is greater than the open interest over here when you compare the two. So we sold that, and then what we did was we went all the way to the next, the May 19th over here, expiring 21 days. And then for this, we also bought the 103s. And so what that does is we created a calendar spread, as you can see from over here. This is a spread that will take advantage of the low volatility that we're seeing on Amazon. And you'll see here when we look at the current volatility, today's it is 1%, very low. And so we believe that doing a calendar spread is one of the most advantageous trades when there is a low IV percentile environment, because the Vega is very high for the amount that you're paying for this. And this is a 5 Vega trade, positive theta. And so if you look at our break even on this calendar spread, it is a bearish, but it is between the price ranges around, the break even is around $99 is our low end, and upside is 107. So as long as it trades in those ranges, by May 5 we will be profitable. And so the reason why we also placed this trade is not just the volatility. We also got some signals on the unusual options today. So if we look at this, the tape today, we'll see here that there was these lots of these. This 12,000 one came in just about 30 minutes ago. You'll see this, it's actually the same trade here, place 301. Make sure you are subscribed and hit the bell icon so you get notified whenever we see this, because this happened just 30 minutes ago. They bought the 80 strike puts and then sold the 132.5 strike calls. This is a bearish. Keep in mind this is 2024, so this is expires next year in January. However, when we also look at this trade here, this is the 3,927 of them here. This is a this is targeting the 103 strike puts here, and we believe that they're buying the 106 strikes, selling the 103s, closing the 103s for that expires today. So that's a bearish vertical spread. Okay, and so that's also why we are leaning bearish towards our calendar spread. And here is also another reason. This 2 p.m. trade over here, 3,000 contracts. we believe this one is also very bearish. This is buying the 95 strikes and selling the 102 strike calls. So lots of bearishness in the unusual options activity today, and so we are leaning bearish. However, we are going with a calendar because the volatility is at 1%. This is very low for Amazon, and so we expect the volatility to increase. So we would like to take advantage of that and put on a calendar spread that takes that has a higher vega for what you pay. Currently, this calendar spread goes for 109, and so paying that much to get this amount of vega, we think is quite efficient to gain more vega on Amazon, rather than going with a bearish vertical spread. Of course, you could do something like that. You could, for example, do that 106, for example. Well, sorry, we have to change that to a custom. For example, if you had done a that vertical spread that we saw a little earlier, it is also going for about $100. However, if we look at the vega, it is only one vega, right? You see the one vega there. So with the calendar spread, we are able to get 5 vega for the same price, and so that's why we like the calendar spread, and so that's why we are going with that instead of the vertical spread. Calendar is one in which you are having different expiration dates here. Okay, and this is a calendar spread. So that's our trade. Hope you learned something. Smash that like button and subscribe if you haven't, and hit the bell icon if you want to be notified whenever we see unusual options. Take care, everybody, and have a great weekend.